Hello, you're watching the business headlines on HW News with me, Ali Azhar. It's that time of the year again where the 6 most prominent members of the Reserve Bank of India voiced their decision about the interest rate policy and other macroeconomic factors that affect the country. It's time for the bi-monthly Monetary Policy Committee meeting. In its first monetary policy meeting for the current financial year, which began just a few days ago, the MPC decided to cut its benchmark interest rates by 0.25% from 6.25% to 6%. This marks a second consecutive rate cut and was done so on the back of lower than expected inflation and reduction in GDP growth forecast. GDP growth and inflation are the two most important parameters on which the RBI decides whether or not to cut or raise the benchmark interest rates, also known as the repo rates. The repo rate is directly proportional to GDP growth as well as inflation. This means that if inflation forecast and GDP growth forecast increases, it calls for an increase in the repo rate, or the rate at which the RBI lends money to banks. And a decrease in inflation and GDP growth would have the opposite effect. The GDP growth forecast for financial year 2019-20 was lowered from 7.4% to 7.2%, and so was the inflation forecast. And this may have encouraged the MPC to cut interest rates to 6% with a vote of 4:2 by the 6-member strong committee in favor of a rate cut. This rate cut is an attempt to propel the economy ahead of the general elections and will result in lower cost of borrowings for banks that are expected to transmit the same to individuals and corporates, which would in turn result in lower EMIs for home, auto, personal and business loans, thereby providing relief to borrowers in the run-up to the elections. The MPC maintained its policy stance as neutral, with a majority vote of 5:1, giving the committee room to move in either direction based on incoming data in the future. The decision to cut rates was in line with expectations, with 41 of 43 economists polled by Bloomberg expecting a 25 basis point rate cut. We now bring in our business and finance editor, Mr. Akhilesh Bhargav, for a further analysis. Mr. Bhargav, what is your take on today's interest rate cut and the monetary policy in general?
The monetary policy of the Reserve Bank has cut benchmark interest rate, the repo rate as we call it, by 25 basis points, and now it is at 6%, which is a 12-month low. This rate cut has been done, according to us, due to softening of inflation, even though the MPC notes that there could be pressures on inflation due to increase in crude oil prices in the international markets, volatility in international markets and fiscal slippage. They don't mention what the fiscal slippages are, but to us it would mean pressures on India's fiscal deficit, either due to the PM Kisan Yojana that Mr. Modi has announced, or due to, in case the Congress comes to power, due to the Nyaya Yojana of the Congress party, which is going to give some minimum income to the poorest. That would give fiscal slippages and that would impact inflation. Due to uncertainty over the monsoon, the MPC has kept the monetary policy stance at neutral, which means it is still not very confident about growth. And pertinently, it has brought down the GDP growth rate estimates for the current financial year from 7.4% to 7.2%. Everybody now recognizes that there are headwinds to India's growth this year. The point is that in doing so, with comfort on the inflation front, the MPC has cut interest rates to spur domestic growth and private investment, which we all know has been languishing now for quite some time. In fact, private investment is at a 7-year low. It shows lack of confidence in the economy, and that has been impacting our growth rates. But then, with the monsoon uncertainty, it will actually prove to be a further dampener on our growth rates, which explains why the MPC has preferred to cut interest rates, preferring to spur growth. To us, the issue is not just of an interest rate cut. The first issue, according to us, is that whether the banks will pass on the benefit of such interest rate cuts to the borrowers or not, because when interest rates were cut by 25 basis points in December last year, the benefit of interest rate cuts were actually not passed on to borrowers by the banks. The second and the more important issue is that growth has been receding. There are signs of growth showing signs of fatigue, and just cutting interest rates is not enough. There also needs to be liquidity in the system, and for that, according to us, the Reserve Bank of India should have also cut the CRR rate, the cash reserve ratio rate, because of which much more liquidity could have come in the system. And by doing that, truly, growth would have been supported. By just cutting interest rates, according to us, Reserve Bank of India has done half the job. It will not be enough to show a real improvement in growth rates, particularly because interest rates remain, the real interest rates in India remain the highest in the world. So it's good that they have cut the interest rates by 25 basis points, but we think even though the rate cut is because we need to now support and spur growth, we think without liquidity not being infused in the system, for which there should have been a CRR rate cut, we think that is not enough.
Thank you, Mr. Bhargav, for that insight. The stock market too had priced in a rate cut and was on the rise in the last few days on expectations of such. However, after trading flattish in the opening morning trade up until afternoon, markets slipped to end lower on profit booking, with Nifty closing 46 points down and Sensex seeing a drop of 192.40 points. The next Monetary Policy Committee meeting is scheduled to be held on June 6th, by which time a new government would be in power. Will that mean the rate cut cycle would come to an end? We'll just have to find out. Thank you for watching HW News. This is me signing off. Have a great day.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.